stop, just for a second. Ask yourself this. Why are you tired? Why does your P&L look like a heart monitor that's flatlining? You think the secret is grinding harder. You think if you stare at the charts for 12 hours a day, the market will owe you money. But what if I told you that the best traders in the world, the ones making the real money, are actually trading less than you? Today, I'm going to show you why trading only 3 days a week isn't just a lifestyle choice, it is the mathematical key to finally becoming profitable. By the end of this video, you'll understand why your hustle is actually killing your account. I remember when I first started, I was obsessed. I thought that every time a candle moved, it was an opportunity. Monday morning, I was there at the open. Friday afternoon, I was trying to scalp the last few pips before the closing bell. And you know what happened? I was exhausted. And worse, I was losing money. The biggest misconception in trading is that more action equals more profit. We are wired to believe that work equals reward. In a 9-to-5 job, if you work overtime, you get paid more. In trading, if you work overtime, you usually just give back everything you made on Tuesday. This is where the chaos begins. When you force trades on days when the market has no volume, like a bank holiday or a slow Monday, you aren't trading a system, you're trading your boredom. You're trading your anxiety. You take a loss on a choppy Tuesday and suddenly you're revenge trading on Wednesday to make it back. That emotional spiral, it comes from a lack of structure. It comes from thinking you need to be in the market every single day. You don't. You need to be a sniper, not a machine gunner. Let's talk about the first pillar of this 3-day philosophy, the trend. Imagine you're trying to swim in a river. If you swim with the current, you move fast and it feels effortless. If you try to swim upstream, or if you jump in when the water is swirling in a circle, you drown. The market is that river. On high-probability days, usually Tuesday, Wednesday, and Thursday, institutional volume pushes that river in a clear direction. That is an uptrend or a downtrend. But on Mondays and Fridays, that river is often just a stagnant pool. It's sideways. I see so many of you using RSI, MACD, or Bollinger Bands in a sideways market and getting chopped up. You say, my indicators said buy, but context is king. A fair value gap or an order block is meaningless if the market has no intention of moving. If you don't know the direction of the higher time frame flow, you are gambling, period. When you limit your trading window to the days with the highest volume, you're essentially waiting for the current to pick up speed before you jump in. You stop fighting the water and you let it carry you to profit. Now let's get tactical. Even if you pick the right day, you can still ruin your account with bad execution. I want you to think of a trade I took recently. I identified a clear demand zone on a Wednesday, prime trading time. The trend was up. Everything looked perfect. But I hesitated. I waited too long. FOMO kicked in and I entered at the top of a candle instead of waiting for a retrace into the order block. Because my entry was bad, my stop loss had to be wider. Because my stop loss was wider, my risk-to-reward ratio was garbage. This is the domino effect of poor execution. You must have rigid rules. I will only enter if price taps this specific Fibonacci level. I will only enter if I see a rejection wick. And let's talk about the stop loss. It is not an insult to your ego. It is your insurance policy. I see traders moving their stops, praying the market turns around. Just a little more room, they say. That is the voice of a losing trader.
If you were trading only 3 days a week, you have to make those days count. You cannot afford sloppy entries. You need to define your risk before you click the button. If the setup isn't pristine, you sit on your hands. That is a trade in itself. Here is the hard truth that hurts to hear. You don't need to win every trade. You don't even need to win 60% of the time. This brings us to edge. Your edge is simply a statistical advantage over a large sample size. It's not magic, it's math. Let's say you only trade Tuesday, Wednesday, and Thursday. That's roughly 12 trading days a month. If you take 2 trades a day, that's 24 trades a month. If you have a 40% win rate, which sounds low, but you operate with a 1 to 3 risk-to-reward ratio, you are going to be wildly profitable. Let's do the math. You lose 14 trades. At 1% risk, you lose 14%. You win 10 trades. At 3% reward, you make 30%. You end the month up 16%. Most people can't handle the 14 losses. They change their strategy after 3 losses in a row. They stop trusting the supply zone. They stop looking for the liquidity sweep. They abandon their edge because they don't understand probability. You need to backtest your strategy to know it works in the past and forward test it in a demo account to prove you can execute it in the present. Once you trust the math, the emotions of a single loss disappear. So why do we fail? If the math is simple, why is trading so hard? Because trading is 10% skill and 90% psychology. The hardest thing to do in trading is to do nothing. When you commit to a 3-day trading week, you are forced to have discipline. Monday becomes your preparation day. You mark your weekly support and resistance. You analyze the economic calendar. You get your mind right. Friday becomes your review day. You journal your trades. You analyze your mistakes. The days in between? That's execution. Discipline isn't about forcing yourself to work harder. Discipline is having the strength to walk away when your setup isn't there. It's about looking at a chart that is kind of good and saying, no, this doesn't meet my rules. Most traders fail because they lack the ability to be bored. They crave the dopamine hit of being in a trade. But professional traders? They're bored all the time. They are paid to wait. Listen to me. The market will always be there. It will be there tomorrow, next week, and next year. The question is, will you still have capital left to trade it? Stop trying to get rich by Friday. Build a system that protects you from yourself. Cut your trading days down. Focus on quality over quantity. Master the setup. Trust the probability. Take a step back. Breathe. And remember, in this game, the tortoise doesn't just beat the hare. The tortoise owns the finish line. If you found value in this, hit that like button. It helps the algorithm find other traders who need to hear this. And subscribe if you're ready to stop gambling and start trading. I'll see you on the charts.